So like I said yesterday, we were looking for a stop run in crude of that low. We were looking for a stop run of this low based on the comparisons between the present pattern in crude futures and the pattern in 2009. And so let me take these markers out. I've got numbers here indicating where the different inflection points in the cycle are. Okay. And we were looking for the puncture of this low right here in relation to the two patterns. That meant we were watching for a puncture of, let me get this right here, 72.14. And of course we had that massive drop yesterday. So what this kind of tells me is that we're locked into this pattern now. Okay. And now, like we said yesterday, we're looking for a return up into the highs, up into the 5 area over here. So what we're trying to do now that we've got this information is disseminate where that return point is. It's 8:24 today on the 12th of July. And so there's a couple ways that we can start to figure out where the bottom of this is before we start moving back up. One of the first things we can do is we can measure some things. So for example, the height of this bar in 2009 was $4.37. The height of yesterday's bar, get it as close as I can, $4 and looks like about 20 cents. So let me pull this up. Let me make sure I have it all the way up. Yep. Alright, so I got that perfectly measured. $4.26. Okay, so we have some affirmation that the pattern is sort of locked in that sense. The low over here in CL comes down an additional $1.84. So we sort of have these two bars that are side by side in the 2009 pattern. I'll make this one, I don't know, tomato. So what we want to understand is today going to take us down like the tomato did in 2009. So that would be $1.84, somewhere in that vicinity, right? From the low of the previous candle. So $1.84. There's $1.51. $1.85 approximately. That puts us, according to that measurement right here, we'll just put a zone, a little fudge room right there. Everybody with me so far? So that's the first thing we can do. And we'll draw that same zone over at the 2009 pattern. Alright, so once we have that first layer, now we can start to dig in a little deeper. One of the things you notice in the 2009 pattern, Gary, is over here we have this retracement at the 3, and then there's sort of this push up. You have that push up bar right there. So I'll put an arrow underneath it. The escape breakout candle right here. Over on the other side, that escape breakout candle is here. In this diagram, the low of the escape candle turned out to be the retracement. Let me run this by you and tell me what you think, okay? Gary, do you see there are 2 candles here that get us up out of the high? 2 very big blue bullish candles right there. Over on this chart, there are 2 large bullish candles, right? This one and then this one. So what's interesting is that in the 2009 version of this pattern, they came all the way back to the low of the second bullish candle. On this side, the low of the second bullish candle is sort of in this area. There it is right there. So there's a little independent. We're kind of honing in on an area here, which I like. All right, now we focused on 2009 because the daily cycles of the Orion indicator were lining up with the exact highs and lows in 2009 when I went scanning for this constellation that we talked about yesterday. The drop, the push, the drop, the breakout, the consolidation, and then the re-attack of the high. It's almost a mirror image of what they were doing 9 years ago, which should scare the piss out of people. Do you remember the class that I gave in Las Vegas, Gary, where we talked about what I'm expecting in the fall of this year? It's kind of odd that we're seeing a pattern in crude that occurred back in the 2008-2009 recession. I don't know. Let's not get off track. All right, so now once we get into this, there are some ways to really fine-tune where we're at. And one of the first things I can do is I can leverage the resonant angle theorems of markets. That is to say, there's an angle in this market that's constant across the 9 years that they have to follow just because of the way time operates. And one of the ways I can find that is I can leverage the angle based off of right here. And I try to capture as many of the lows and the highs as I can. So here we have 1 high, 2 high, 3 high, 4 high, 1 low, 2 low. It's in the ballpark. Pretty damn close. So I'm just going to move that line around and I'm going to look, Gary, for multiple hits. I want to see if I can find an area where I'm getting multiple hits on the angle on the way down. And that right there, if I modify it just a little bit, gets me really close. So now let's come back up here and try it again. How do we feel about that angle? Pretty good? Okay, we'll move it over and try to capture some highs. Yep. Okay, we'll come up over here, we'll put it underneath. See how that's defining the price action? That one angle. We can start to copy it. Right, and place it up here like that. Now we go back to the midline. There's always a midline right there. So does everyone see that there's an inherent angle in the market that we're looking at? Now, one of the ways that I can really prove this is I can drag that angle all the way over into the present. So Gary, here we are years later, and I'm starting to see that same angle is producing the same kinds of effects, right? Come over here a little bit more. Come over here a little bit more. Touches, 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 touches. So let me get over to the present. Because once I have this, gotta come down a little bit. I can use it in the current stuff. To define where we are in the pattern. Okay, so that's the line from 2009. I'm going to just start drawing it here and defining the edges right here. Pull it open. And this part actually requires a little bit of art. And an eye. And you get that by just doing it over and over again. Alright. And I just want to define these clusters as best I can. Now, for every one of those lines, I need the opposite, the one going the other direction. So I'm going to create this one here. So now we have two equal but opposite angles mirror images of each other. And you see how I've just picked that bottom here, Gary, real quick? And where everything is lining up along it. That's going to really help us. Okay. So what I'm going to do is I'm going to put this on all my CL charts that are daily charts. And now over here, we're starting to get those angles, right? So the chart on the left, this is the one that we're trying to emulate or copy. And I'm going to take that angle that we've been using and do the same thing that we just did. I'm going to get our green line so that we can make some generalizations. Okay. So the chart on the right, we have those green angles like that. So the high up at number 4 was captured by the green line. So I'm going to take this and we're going to define that high over here. Like that. Okay, so Gary, that's my primary green line. Everybody with me? So over here, that primary green line is going to be right there. Okay, we'll use different colors now. So now I want to start to understand where this one came from down here. See it? We'll make this one, I don't know, slate blue. So now, Gary, I'll take this one, and we're going to use the geometry to define where this one came from. So over here, I know that this blue line on the left, Gary, had something to do with this part of the phase that we're in over here where that orange arrow is. These lows of this retracement, right? I know that that's where it had something to do with it. So I'm going to pull the purple arrow up, and I sort of have two choices. I have over here, and I have over here. I captured two of the lows and two touches at the lows on the retracement over there. You see what I mean? There's a couple touch points that I need to make sure that I'm getting. It has to be involved in this cluster, and it has to be involved in that cluster. The breakout bars, the lows of the breakout bars, and the consolidation cluster of this initial sell-off. Okay, well, over here, I'm going to get rid of these measured moves before we do that. So this blue line is going to help us define where the bottom was. There's only one place on here, Gary, where I can satisfy the angle across this cluster and this cluster and this cluster. And to get it there, I have to push it up to here. Do you see it? There's an expression that I heard once that said, history doesn't always repeat, sometimes it rhymes. Sometimes it rhymes. So, with the blue line there, it meets most of the qualifications in that it's touching the lows of these two candles. They fit. And then look how brilliantly you have 1, 2, 3, 4, 5, 6, 7 of those candles. That angle lines completely up with the blue line. And so what it says to me is that we may already be at that low point, and CL may go back up from here. Again, in terms of where we're at, I'll put the vertical line here. I think we're there. And so what I'll do now is I'll take this red line and we'll see if we can't find that high. Here we go. So the intersection of those two lines, check this out. Number one, I drew this red line down to define where this cluster is, right here, and it perfectly captures this high right there, which gives us this little crotch in between, similar to what's going on here. Sometimes you just want to move back a little bit to appreciate what you've got. The chart in 2009, we had a higher high to the left, and it defined the slide on the way down. Over here, this was the higher high. It pushed past it. Normally, I'd want to put the red line here. But in this chart in 2009, that subdominant line would be right there, Gary. So it was more bullish in 2018 than it was in 2009. So now, where is it going? That's the question. So I'm going to take this little green line right here, And there are two alternatives. It's either coming back up to this green line here or to this one. The more conservative, obviously, is the lower line. That lower line puts prices back up at the 74.21, 74.46, 75 area, a retest of 75. So all in all, this candle right here is this candle sequentially right here. Either this is the support level today at 70.30, or you know what, I was going to say down here below, but this blue line matches the criteria of being through this cluster, being involved with the lows of the retracement here in between 3 and 4, and then continuing up. Same thing here, involved in this cluster, involved in the lows of that bar, and now up in here, and it just matches everything. So I'm going to go with that today, and we'll be looking for long positions throughout the morning using the lower time frames. So down here on the CL chart, we're using the intraday software now to look for the times that the software has determined that banks are likely to push. So off into the future today, if we watch for those buying pressure times, 8:33 was one, 8:42 was a pattern 4, 8:45 is next, 9:22 on the 1 minute charts, and then out into the rest of the day. So we'll watch it and see what happens.